All righty. Good afternoon, good evening, good morning, wherever you may be. Happy Sunday or Monday, wherever you may be. We have Scott Smith here to join us on this Sunday's webinar. He is the founder of LiveTradePro.com and is a partner of TrendSpider. He uses TrendSpider pretty often, so we're excited to have him on. Before we get started and before I introduce Scott, just want to go through a couple, classic disclaimer things, as we always do. Anything that we talk about tonight, and I'm going to go ahead and mute this real quick. Anything that we talk about tonight is not going to be buy or sell signals. You should immediately jump into this stock. That is not what this is for. So if you're looking for that, tone it down a little bit. This is just to take a look at the stocks into next week and see what's kind of looking interesting on the TrendSpider platform and highlight some of the features that we really utilize every day. So before we hand it off to Scott, which will be pretty quick, just going to go over today's agenda. We're going to go over the broad markets just to get an idea of what the status quo is of the overall market. And then we're going to go into some charts into next week that may look interesting, as well as a few case studies on recent raindrops, because raindrops are something that are very unique to TrendSpider, and we want to make sure that we really highlight those in any case studies that we find. There are a few over the last couple weeks, so I definitely want to highlight those in my presentation, but Scott will be going first, looking at some charts, and we'll kind of go through a free flow conversation and just look at what the broad markets are looking like. For those who have never heard of TrendSpider before, and I'm sure many of you have, we're a charting platform at the base, but on top of that, we're a fully integrated all-in-one trading platform in 8 months. So what I mean by that is we have the technical analysis charting platform. We are working on the ability to actually integrate brokerage data into the platform so you can actually trade through those alerts that you actually create. So that is something we're working on. Let's say that you find a set of conditions that you want to test. You can actually back test those. So there's a ton of different things the TrendSpider platform utilizes. And depending on what type of trader you are, you're probably going to utilize, maybe not every characteristic of the platform, but there may be a couple that really add value to your current process. So before I hand it off to Scott, what are TrendSpider's main functions? What is TrendSpider? So at the base, TrendSpider is a charting platform. So, any other charting platform you look at, you're probably going to see some of the basic things that you see on TrendSpider, because those are the things that, are expected of any charting platform. Where we really add a unique value proposition is through our main function. So we have the ability to backtest without actually having to create any type of condition that you've coded in, right? There's no coding. It's all a visual interface. You don't have to know how to code. You can easily create a set of conditions and backtest those or create an alert on those. So that is the first part of the system. The second part of the system is the ability to automate some of those processes. So for example, automating trend lines, automating Fibonacci levels, automating the ability to overlay the weekly Bollinger Band on top of the daily price action. So these are all things that we want to kind of create a new value proposition for users that has not been there before. So we'll probably touch on all of these, but I did want to introduce those specifically. And, without further ado, I'm going to hand it off to Scott, and we'll start off the charting extravaganza tonight, if you will, and we'll kind of go from there. So Scott, thank you so much for joining, and welcome to the webinar.
Hey, Jake. Good evening. Good evening, everybody. Glad to be here, Jake, with you and everybody, to share with you some things that I'm looking at as far as the overall market and so forth. I'm just going to get my screen up here. I have the wrong screen up. Okay, can you guys all see that now? Are we there?
Yep, I can see it beautifully.
Okay, great. Sorry about the delay, guys. So I'd like to just start with a SPY. Obviously, it's a common one that everybody's following for the overall markets here, and bringing it right back. Everybody, of course, remembers December there, the big fall, coming back earlier in the year. And I just kind of bring that up because as we move forward here, after it breaks above the 200, we have these pretty significant corrections along the way. And we really start getting more of an established pattern as we get into the later months here. And for me, that was a sense of support, and not just because of a couple of bounces, but the consistency going on here. So when this came, the major sell-off, one thing that's been fairly common in this market is oftentimes the best signals to supposedly sell become the best times to buy. So I was watching this closely. You could see it came just short of the 200, bounced up, and once again worked its way up. This here, nice significant signal. The balloons on the raindrops here also giving more confidence, showing the volume up on the higher levels. Was watching this closely with this triangle formation here, ascending triangle formation. And then, of course, the clear breakout to new 52-week high, giving even more confidence. I'm looking at a lot of other things. I'm not just watching the SPY. I don't trade the indexes per se, but I am watching them closely as far as getting a better handle on individual stocks. So along with that, I'm paying attention to things like UVXY. It's not one that a lot of people necessarily go by. Some people say you can't chart it. I don't look at it, microanalyze it by any means, but I am taking a look at it. This year, October 15th, was just another additional signal since this rally started 2009. Anytime we've had corrections, as you can see, these spikes here and so forth, and then hit a new all-time low, the market has always gone higher. So that was just another additional confirmation for me that we've been on track here. Another one I'm following is the banks. I was putting this out on the social media long before we broke out. You can see another ascending triangle formation. You got that familiar type pattern. You got out this double bottom here and breaking out to new 52-week highs here.
Scott, real quick. I just want to mention, you know, you were somebody that I was following pretty closely, and you know, I didn't want to say that I was bearish by any means, but you know, you started mentioning the bull case that, you know, was clearly there, and you know, the fact that you mentioned that, I really started to take, you know, a secondary perspective on the long-term markets, and you know, it was pretty fascinating to see how quickly it went up from there. So I just wanted to point that out, that, you know, you had been having this on your radar for quite some time.
Yeah, it's one of the sectors that I certainly keep an eye on. I really don't trade the individual stocks on banks. They're a little bit too volatile for me personally on a short-term basis, but I absolutely like following them for a general direction of the overall markets. And I like the consistency that I was seeing in that. Another part of that individual part that I was following closely. Again, I don't trade this particular one. This was on earnings. I'm sure a lot of you guys remember, guys and gals, remember this. Earnings came out, huge drop to pop. You see nice formation there under the 200. They pushed it well above the 50 here. And then, of course, what I was looking for was the follow through, because it could have just came back down here, right? So I'm looking for the consistency in the pattern. I'm looking for the follow through. And I was seeing that along with BAC, you know, Citigroup and some others. As you can see, it continues to have beautiful follow through. You got this huge megaphone pattern to go by there. What was cool too, Jake, about this is I pulled this up on the software, and boom, there it was. Those are the trend lines. This is not a chart that I drew any trend lines on, so it just gave me a real good, quick, clear picture of exactly what to go by. And I would say last but not least is the EEM here, the emerging markets. Now, look at on the daily here. Back then, I wasn't able to get as quite of a clear picture as I wanted to, although you can clearly see the breakout above this trend line, the resistance. And so to get a little bit more clarity for myself, I put it on the candles and I put it on the weekly chart. Now look at that, right? Now it's a no-brainer. You see it hit point to point to point perfectly. Here's your attempted breakout, pulled back. And keep in mind, this is the weekly, not the daily. And then just boom, crystal clear breakout. And again, just to give me that much more confidence in the overall general direction of the markets, and to be able to trade the individual stocks. Another one that we do trade fairly often, swing trade positions, is the biotechs. I like LABU. That's my personal preference. And as you can see here, okay, that's a little different than what I had up previously. But again, you get that drop to pop setup, the extreme, nice comeback right above the 50, and getting that continuation on the biotechs here.
You got a nice cross there too, right? What is that? The 50 crossing the 200?
Exactly. Anytime I see that, and it's a factor that I used when we were coming out of the correction of late last year into January, February this year, and across the board, we kept seeing stock after stock doing that 20 above the 50, and then that 50 above the 200. Not a small thing. Whenever you see that, that's a very strong signal of the likelihood of a longer term trend that's going to continue here. And Jake, one other thing I did want to just go over is the SPY here. You know, a lot of people, they're going to be saying, oh, that's why I got it on the 10-minute. Hello, Scott, wake up. That's why I didn't see the XBI chart the way that I wanted to. I was like, hey, where'd the line go? There it is.
There it is. Beautiful. All right.
Okay. So you can see, guys, that again, the software is a big help for me. I've only been using this for, well, it's like, I guess about a month now. It is my go-to charting. It's what I use now. And this is part of these. I mean, look at this. You get the gap fill here. And this is the drop to pop setup I was talking about. Failed breakdown. And here's the thing again, I was seeing that consistency, this happening with many other stocks, failed breakdowns, only to end up breaking out. And you can see it went back above this trend line. This was the breakdown line that I was using. I saw it go through here, so we avoided it at that time and then took advantage of it on the way back up. And we traded it some in between. It has been volatile, but very consistent in that action. Then Friday had that big drop to pop setup. I saw early morning. I was like, oh man, this looks beautiful. It popped just above the 20 and did nothing but go higher from that point. It was the classic confirming above this line, beautiful close, well above these marks. And of course, you have the 200-day moving average that we're going to deal with. But I take these things at a day at a time. I don't predict. I mean, when we were buying down here, I wasn't predicting that it was going to break out through this resistance. I had no way of doing that. So I'm simply looking at the guideline one day at a time, one piece at a time. This here was that, you see that nice little purple raindrop just above the support there. And from there, bullish breakout, gap up breakout, pushing above that key pivot right there. Here we are again. And then this here, beautiful confirmation, the likelihood of a trend reversal. So I take it one step at a time, looking at the overall picture, going piece by piece. And at the same time, not getting too much into micro analyzing every up and down, move that's happening there. I'm swing trading the stocks. I'm not day trading them. So I'm always zooming out, looking at that bigger picture and taking each piece at a time, breaking it down, looking for confirmation, looking for follow through, right?
Scott, can I ask you a question?
Yeah.
What is your main signal, right? So you can see here that we kind of closed right at that 50 SMA. Is that something that you would buy before you get to the SMA, or is that something that you buy before, a breakout? Like after once it breaks through, is that something that confirms your trade, or is this something that you've already kind of like thought about possibly entering?
I'm usually buying it in anticipation of the stronger signal to come higher to reduce my risk. I'm looking for some signs of reversal prior to that, near good support levels to lower my downside risk, and then waiting for that confirmation if that should occur. And then I may consider adding higher when that happens, either on a pullback, either and or the confirmation of the breakout.
Makes sense. Okay, cool. Well, I was just curious because I didn't know if, like the trend line breakout was your buy, or if it was actually the breakout through the SMA.
No, most of the time I'm actually buying in anticipation of that move, especially the way the market's been like the last couple of months. The last thing I've been wanting to do is chase stocks, and in these conditions, it didn't take much to do that. So I wasn't looking for big, strong signals higher. I was looking at those, as you were mentioning, as confirmations of me being in the right place at the right time.
Got it. So
now I got that question.
I didn't mean to interrupt you, but it's interesting to see how XBI is so much lower than the rest of the broad market indices. What do you think about that?
That they're lower. It was a very, very long correction process, and honestly, I don't know why that was. And I thought they might keep deteriorating while most other sectors were going up, that they were not in favor anymore. So we traded it some in between here and there, short-term swing trades. But as far as the why, I don't know. I mean, you get them downtrending and you get the banks consistently uptrending. There was definitely a change in sector rotation.
Yep.
So I don't know. The one thing that did get my attention though also is we were buying LABU way back here. We actually started buying on the 24th of December, and we were adding when the market opened back up after Christmas there. We had this big pullback. January 4th here was a huge confirmation of the likelihood of going. That's when we just loaded the boat at that point. But my point here being, it's common for the biotechs to actually start heading in a bullish directions prior to other stocks, other sectors. And so I was looking for that here, and that's one of the reasons why I was watching it when it had that severe breakdown, because if I thought one place was going to start first, that would be it. And as you can see, it's had some good continuation from that, and it was one of the first stocks to actually have a significant takeoff from that point. So it's volatile, but I love trading it. It talks to me. I get a good read on it. And it it pays a nice percentage typically in a short period of time. Not for everybody. Some people may want to just go with XBI, but I far prefer it over trading individual biotech stocks. I just don't like that type of risk factor, so I'll trade the ETF here. So
Yes.
go ahead.
I was just going to say, it makes sense. I mean, you know, it's XBI, even IWM, the same thing. I mean, both of them have really been laggards. And, you know, it's been interesting to see, you know, are those going to be the ones that kind of rotate in and make the next leg for the market? Because at the end of the day, right, the market needs to rotate because the market just can't keep going up on one leg based on one sector. It needs to transition into a new kind of sector bull market to kind of get that next leg up in the market. So we're not, you know, dependent on one sector, if you will.
I agree, and that's why I'm continuing to follow the IWM, and it gets more interesting as we move along. And my thought process is, if this starts breaking out like other sectors are, it could get crazy good, and it'll just be another factor. The more signals that I see that are in sync with each other, the more confidence overall in the bullishness of the market. And I know there's, you know, the naysayers and the people that are skeptical, and I certainly get that to a point. But at the same time, I have to trade based on what I'm seeing. And so things like this, like I was mentioning here, and when we were heavily trading through here, it wasn't because I predicted these type of things. I simply was trading it like a bullish market unless it proved otherwise.
Yep. I think you do that with a lot of stocks, right? You kind of just trade it like it is until something changes.
Yeah. And so the other example I have of this is ROKU. I'm sure everybody's very familiar with ROKU. It's definitely one of our best trading stocks. We do very well with it on a very consistent basis. And I'll just bring this back a little bit, and you can see here.
Actually, ROKU had a recent blue raindrop, kind of like almost a Harami type deal.
Yeah, are you talking about Thursday?
It seems Friday's candle was blue, which was kind of inside Thursday's candle, which that was earnings, right?
Exactly. Massive gap down on earnings. I think it was like 15-16% down or so. I thought I might not even touch it. I wasn't sure. I knew the 120 mark was going to be pretty key. I was thinking I might enter around 122 or so, and I'm watching it. It was tempting, but I held myself back. You get things extreme like that, people go a little crazy sometimes. And the pullback, it's not unusual for it to go further than you might expect. So I waited on it. So 119.20 mark, where I was liking it. I thought it was attractive. I got some personally. I alerted it, of course, to my subscribers, and also picked up myself. And we had excellent follow through. I don't remember the exact top there. It went to like 128 or so, like that. And I typically suggest, especially if somebody's loaded the boat on quick moves like that, and it's up 8% or more, take at least some off the table. This is a good example that hit 128.38. Quite a move from our entry there. As you guys know, it had a significant pullback at the end. One thing I noticed, Jake, was I saw something a little different in the raindrops here. Is it's fairly consistent on the left and the right and the top and the bottom. And I'm like, that's interesting. I almost thought I was going to get stopped out Friday, honestly. But it didn't even come close to it. One thing I did notice, you see this key point of support that I put in there on 118.59. What's interesting about this, Jake? Look at the low of day for Friday, 118.70.
Beautiful.
1 penny above the mark. And you know, those things aren't, I found that they're not coincidence. And which gives me even a little more confidence in that, along with the overall picture. We did trade this off these marks. I'm not going to go into every one. As you can see, I had up here a very questionable area of significant resistance above the 150 mark, because this was so extreme, so fast. And there's going to be people up here, you know, after a drop like this under $100, they're going to be like, you know what, it's back up here, just get me out. So I was looking at that area carefully when we were trading it back up this way. We exited at 148.80 up in here. I don't remember the exact day it was. It was one of these days up here, and not based on a reversal. We could have waited for this, you know, to come back down. But if you waited too long, wow, you just lost all those gains and then some. So we got out then, we waited. And I don't like to hold through earnings anyways. I just don't do that, even on stocks I love. I think Roku is fantastic. Fundamentally, the way that it trades on a technical basis. So I'm glad for the way we might have missed a great run up here, but it actually gave us what I believe is likely going to be a good opportunity here. You see this trend? I mean, look at this. And again, this was put in from the software. And this was great in guiding me, Jake, by the way, when we were entering around this area here. We actually tried attempted entry around the 104 mark, got stopped out, took a 2% hit on it, and saw it go down to $98 here. I'm like, okay, Scotty, good job. You know, you're out of there. It's the right thing to do.
We had a blue raindrop right down there too, not necessarily at the bottom, but kind of like forming in that consolidation area.
Right here?
Yep.
Yeah. So, but I kept my eye on it. I wasn't watching it too closely because I'm thinking I probably just don't want to be there. And then I watched this line here that you can see basically doubled off that mark there, and it's coming back, and then got back in around the same price, $104 here. Okay, and as you can see, just nice, good continuation there. Roku is one of those stocks where you know that they all got a little different personality and so forth. And so Roku, I do not watch for typical bullish round bottom setups. I definitely don't want to look for a bull flag because most of the time it's just not going to pan out. It just has a quirky way of trading intraday, so I don't watch it too close. I rely on the daily to help make my decisions with that. And so as you can see, this pullback here, I didn't get caught up in that. We held through that and just boom, beautiful break through that next level of resistance that you can clearly see there, breaking through. And you can see my notes here, alert triggered new initial support here. Each time it went through significant levels. And then the 150 for me was pretty much a no-brainer. It's like, don't be greedy, get out, be happy. And again, as you can see, the process I even took there in the notes that I have, I'm taking one step at a time, each level of support, each level of resistance. I don't want to presume anything, and just trusting in what I'm seeing on a daily basis. And of course, that longer projection there.
Makes sense. So as far as, you know, the current setup, would you consider what we kind of saw a bullish tsunami, or do you think it still needs to kind of confirm before we see that?
At this point, all I want to do is see it stay above 120. If I see good, consistent buying above that 120 mark, and it doesn't mean it can't follow under that short-term intraday, but if it closes above 120, ideally well above 120, I want to, because I don't want them to just buy it at support. I want to see that they're willing to buy well above that. So far, they showed that even with the earnings, even though it pulled back, they were more than willing to buy aggressively well above the mark. So I'm just looking for that consistency at this point. And of course, I'd like to see it back above this trend line. And then I'm going to start feeling more comfortable. And if it can stay in this area here, I don't think it's just going to necessarily shoot straight up. But that's what I'm looking for. Bottom line is $120. If I can see that good, consistent buying, consistent patterns going, and then I'll feel comfortable holding that trade and just watching it.
Hey, it makes sense. Well, can you see my screen?
I can if I get back over here, I'm sure. There we are. I'm there.
Alrighty. So I'm just curious. What do you think about 5 weeks green in a row?
We're talking the SPY 5 weeks green in a row, new 52 week.
These weekly candles here, 5 weeks in a row. I mean, is this something that's confirming a breakout? Is this something that's confirming maybe we're getting overheated? What do you think?
I'm seeing it definitely as confirming the breakout, and now of course the concern is, well, does it keep going up another week? Or I know there's different views out there. In fact, I've heard them as early as early last week. Expect to pull back 1-2%. Different guesstimates and speculation. It didn't do that, obviously. We continued to go higher, and so I don't see any reason to think that it won't even continue to go higher. But here's my thinking too. See, let's say it does pull back some this week. Okay, I don't see that as a major concern, even if it does that.
It's almost just to everybody watching or listening. This is not advice, but
right.
I'm kind of right there with you. I mean, at this point, we've already broken out on a long-term scale. To me, it almost seems like a buy the dip opportunity.
Yeah, and that's where I'm coming from too. And on the individual stocks, and then we've certainly seen a lot of that recently. It's all about which stocks. So even at some point, we will pull back. It might be this week. It might be a 1 or 2 day process, whatever. I'm not trading the index, so I'm not overly, it's not like I got calls on here and I'm just hoping it'll go to the moon. I'm trading the individual stocks. And the fact is, even when we do pull back on these major indexes as such, at some point, there's still going to be, it's still a bull market, whether it pulls back or not. As long as it's not, severe and breaking down significant levels. I expect some corrections there. I'm not concerned about that. I'm going to keep my focus on the individual stocks and keep an eye on the broader picture of the markets at the same time. Wide scope.
Yep. And I'm the same way, right? We've already, we tested this area. Let's draw this. Excuse me. All right. So we tested this area once, twice, and then, just absolutely destroyed it. So if we do pull back, this would be a natural place to kind of watch for, an area of catching a bid, right? Would you kind of assume the same thing, Scott?
Potential pullback. Ideally, I'd like to see the buyers come in a little higher. That's my ideal.
Yep. So the cool thing about this is, so we're on the SPY, right? We're on the weekly here on the right side of the chart. And we've had 5 weeks up in a row now, which, seems like a lot. But if we actually turn on the pattern recognition and look for 5 green candles in a row, and we kind of look at this on the long-term side of things, there's a few ways to look at this. And this is what's really cool about the pattern recognition. You can actually go back in time and see, how have these moves returned in the past? Well, we've got this one. So let me hide this.
That's really cool, Jake. That's one thing I've not yet seen. That's exciting, and you can see at a glance the results there.
Yeah, because because I've done a lot of manual technical analysis, and it's before we had the pattern recognition, I was doing this by hand. And so, now I'm able to click the patterns. And so this is in 2014. So we're actually looking at the last almost 6 years of data. And we're looking to see how have 5 candles returned over the last 6 years of data. So August, so that's September 1st, 5 candles in a row. We topped out and we moved down. Let's see, what is this? Wow. 10% down in 4 weeks after this type of move in the past. So something to keep in mind. Let's move on to the next one. Here, 5 green candles in a row on the weekly. Almost 14% down in 2 months and 3 weeks. So that was in 2015. We've got
2016 crazy times.
Hey, you know what? I got absolutely murdered in 2015. And the reason was, and this is a good lesson for everybody, just because the Federal Reserve says they're going to raise interest rates, that does not mean they're actually going to do that. So in 2015, Janet Yellen said she'd raise interest rates 4 times in 2016. And that made everybody bearish because, interest rates go up. People want to take their money out of the market, put it in fixed income to get a more stable kind of, safer return. Well, in April of 2016, she decided she didn't want to do that. So, these are the things you want to keep in mind, right? So this is an example, 2015, we ripped to the upside and absolutely tanked after that. However, February of 2016, we absolutely moved huge to the upside. And that was really the start of, let's see what that is. 43% in 6 months. So, as much as the market looks overheated, whatever you want to call it, you can take a look at these longer term patterns and see, is this really something to be worried about? And you can actually back test this and see what the return is. So that's something that's really important because here's today's action. And you can see we've got these 5 green candles in a row, and we're actually nearing this resistance right here. We did not touch it. However, what we did do was we barely touched this margin of error that we created around the line. Just going to remove this. And so what you can do here is notice here, there's times, in this case particularly, the weekly candle touches this area. Now, let me, this is the first point. So you can't really say much about this area. You can't really even say much about this area because it's the second point. However, there is a possibility that we move higher, but we don't actually touch this red line. So right here. So, what happens if you don't actually touch this resistance line? Well, the nice thing about TrendSpider is you can go here and actually choose the margin of error you want around that line. So you don't necessarily have to hit this exact line that we show here. You just need to get it within a margin of error of, in this case, this is $1.82 of the selected line. So rather than waiting until we hit this exact line, you can actually capture that move within this alert and not actually have to wait for that precise move.
Yeah, Jay, and if I may, one of the beauties of that for me is, it seems like about half the time I have an alert and something like that, I'll be out taking a break, taking a walk, and the alert will go off. So I know even if I'm not in my office, what's going on, and something like that to give you a heads up before it even hits that point. Such a huge advantage because on the timing, you don't have to wait. You don't have to wait till it hits or goes above. You're prepared even before that point.
Well, and the thing is too, right? Everybody thinks that the price action needs to hit that exact line. You know, in a perfect world, that's the case, right? We hit this exact line, but there's a lot of the time where the price action, is a function of who's watching this, right? So if there's too many people watching this resistance line, this line may never be tested because somebody who has a ton of shares may dump this before we actually get to this line. Scott, do you see this quite often too?
On that, yeah. And in fact,
within any area, like a moving average, trend line, what may, whatever, you're looking at.
I was actually thinking about way in the past when I first started learning about trading. That's, you're talking, might as well say 20 years now. One of the things that I had read about was about gleaming the field from the Old Testament there. And basically it says, leave something for somebody else. Don't get greedy, taking your profits, and actually sell a little bit early. And don't try to get all of it. Leave some profit for somebody else to take. And you're going to end up actually taking more than you would if you got greedy and went for it all. And not that they can't go higher. I'm talking about stocks that I'm, up significantly on. But it's better to be a little early than a little late. And in this case, having that early notice and then be able to watch that action, what's happening after. Yeah, I mean, those are the points I would be looking for to do that.
It's as much as I want to be bullish, and I'm not saying that I'm bearish by any means, but it is interesting to see, as you've seen in the past. I mean, five candles in a row isn't that common. I mean, since 2013, we've only had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 times in the last 7 years. So that means this only happens about once every, 6 months or so. And so, this is something to keep in mind. Here's an example.
If I could just add, Jake, too, well, one of the things that some may not realize is you got this and you think, well, it's already too high, I missed it, and so forth. There's so many factors that go into this. And one of those is this volatility that we've had over the last month and a half, 2 months or so. It's shaken out a lot of loose hands. A lot of people have already sold because they had to or felt they needed to lower. They're gone, which takes that resistance away, which can just further that momentum upwards a lot higher than a lot of people might ever even think, including me. Sometimes it surprises me.
Well, I mean, if you were to take the last X amount of patterns that we've seen since 2009, 5 candles, and this is the weekly. So, I mean, and like I said, this is not advice. This is not advising. But if I was to take a look at the chart, it doesn't look like a bad idea to buy the dip after 5 weeks after 5 green candles. It just keeps going up. And I used to be I don't want to say I was a perma bear by any means, but I was somebody who didn't understand why the market kept going up. And the very easy and obvious reason is because where else are you going to put your money? Where else are you going to get a return? You can't put your money in CDs. You can't put your money in bonds. The only place you can actually get a return, especially when the Fed is lowering interest rates, you got to put it in the market. I mean, I'm not advising you to just, throw all your money in the market, but when interest rates are so low, there's nowhere else to put your money. Scott, what are your thoughts?
As far as the things that keep it celebrating, honestly, I don't try to overthink it too much. I watch the headlines, I watch, the changes in interest rates and so forth, and then I'm really focused on the price action. there's a lot of people that have very good reasons. I distinctly remember a gentleman I was talking to probably about 4 years ago. He had all the good reasons as why this market cannot keep on going up, and they were all wrong. You know, at the time, it didn't look very pretty. So I really do just take those aspects. I do on a much shorter term time basis, and I really don't try to project. I mean, there's no way I could project it that the markets would be at this level 5 years ago. So I really don't try to project that too far out, and I just take one bite at a time, one day at a time, 1 week at a time, 1 month at a time, and a year at a time.
That makes complete sense. So just one thing that I did want to mention. So this is right here, July of 2007. This is kind of where I made my pivot area for the first measured move, made the measured move on the second side, on the downside, right where we bottomed in 2009. And I want to say, you know, oh, that's my dog trying to say he wants to talk about stocks too. What I want to say here is you can kind of see this price action has really respected these Fibonacci levels. And this is something that was very, very kind of obvious when we did our webinar 3 or 4 weeks ago. And with what's his name? Tarek, his Twitter handle is Fib, I think it's at Fib Lines. But you know, I never really looked at fibs. I mean, I'm not sure about you, Scott, but it just wasn't something I really looked at. And then Tarek really showed me some of these ways you can use them. And it's very interesting how we found very hard resistance at this 2.618 extension from this measured move in 2007 to 2009. And you can see, I mean, very clearly on the monthly. I mean, it's only, what is today? What's the 10th? So, you know, this monthly candle still has 20 days to fill. But, I mean, if you look at this candle, we're clearly starting to possibly make the next leg up. And, you know, that's the same type of thing is where do you put your money? You know, the interest rates are so low, you can't make money anywhere else except putting it in the market. So my question is this the next leg up, or is this just a false breakout and a move down? My personal, you know, guess would be is that we pull back to this general area that we've tested before and then possibly act as an area of support. Similar to here. Notice how we broke out, pulled back right to this area. Oops. And then absolutely ripped.
Yeah, that's a good point, Jay, because, you know, we as traders, we get excited, you know, when we see these breakouts and so forth, and we think they're just going to keep going straight up and, oh, we need to hurry. And it's just going to keep going. And the truth is, more times than not, we do get those pullbacks, right? We do get those other opportunities before it makes that second move higher.
Well, yeah, exactly. And so this is the monthly candle, right? If we go to the daily candle, you know, I mean, if we pull back, this would be a classic area to kind of look at, right? I mean, it's the previous area of resistance. We've had that area, you know, we've had it one time. Oh, that's an exclamation, not a one. We've had it 2 times as resistance. And then look here. We broke through. This area acted as support. And then we just absolutely ripped to the upside. So if we were to break down, this would be the logical area to look at on a pullback because this was previous resistance. And this is likely going to act as the next level of support if we did pull back. Scott, you think the same thing, or what do you think?
I think you're right on track.
What do you think about this I don't want to say it's a massive, but it definitely is engulfing the body of Thursday's candle. What do you think buyers are definitely kind of telling us that we may have more upside into next week?
Yeah, I like the doji formation there, and then with the close above that mark, you got that bullish kind of flag prior to, you got the bullish gap up, the doji, of course, indicating a change of direction. It's not going to tell you that. I like the next day where buyers are willing to come above and buy higher than that closing price on it. That in itself is a good initial indication of the bulls still being well in control.
Yeah, I was shocked. I mean, I by no means was bearish, but I was, I think as anyone, I was kind of shocked that we just kept seeing a bid getting caught.
Yeah. Well, how are they going to play it all out, right? It's one thing to even have a good, you think the likelihood of a projection, if you will, of the stock or the index going to certain places, but to know which road it's going to take to get there, over which mountains and, crevices and bumps in the road and stuff, that's the more difficult part. And that's where you're more, focus analyzing that short-term action, and then of course, because it always looks easy on the daily, right? But that's really the ultimate confirmation, and it has been a surprise. I mean, honestly, I was, as you know, I've been bullish for some time here going into this, but when that new all-time hit on the SPY, honestly, I was surprised. I was like, wow, it happened that fast. It's like boom, overnight, it's there. I think a lot of people were probably shocked.
Yeah, it came out of nowhere, that's for sure. And I mean, it wasn't long before we just kept ripping up. And I mean, just from your opinion, do you think this is actual real buyers coming in, or do you think this is more of a short getting squeezed?
No, I think this is buying, and I don't think it's just a short squeeze. And in fact, if anything, I would have expected more of a squeeze, higher, faster, and we didn't really see that. We've been seeing more of the consistent type action that I like to see.
I was gonna say, I mean, if you want to be a longer term kind of smooth bull, you want to see these type of kind of pullbacks and consolidation. As much as they don't look like a ton of consolidation, there's clearly buyers here buying this wick here when we filled the gap, and then we just continued up. And you can tell from the candlestick, at least, you can tell that buyers were in control from the open because we have a hollow candle. Now, if we move this to a raindrop, this may introduce a new, level of kind of detail, if you will. Let me delete these. And so here on the raindrop, you can actually see, let me zoom this. So in this case, on Friday, we actually had a lot of our volume at the top of the 50th percentile of the actual range of the day. So you can see this little blob here is actually all the volume that was accumulating during the second half of the day. So we know that there was no buyers at the lower part of the range. We know that everybody was actually supporting price at the top of the prices range on Friday. Yeah. So this is giving us a secondary perspective on kind of what's going on here. And you can actually see that volume pushed the price up during the second half of the period because there literally was no volume at all during the first half of the period because it's all flat. If there's any part of a raindrop that is flat, that means that there was no volume at all at that range. So during the first half of the period, which is the left side of the period here, and I guess I should give a little intro here for those that don't know what a raindrop is. For those of you who are familiar with a bar chart, A bar chart has your left side and your right side. Well, in this case, you've got your left side, but instead of this being the open, this is actually the volume weighted average price for the first half of the day. You've got your second bar, which is actually the volume weighted average price for the second half of the day. So you can see that the buyers were in control because the volume weighted average price is higher than the first half of the period. So you can see buyers in control at the end of the day on Friday. For me, my opinion does not matter at all. So please don't, take this as advice. But for me, that tells me that buyers are in control, right? They're buying into the second half of the day at the top of the range. So they're buying into the close at the top of the range. So we'll see what happens tomorrow. If, and like I said, this is not advice. If I was to guess, I would 100% expect some type of gap above this previous high. Now, it does not have to happen, but it does tell us that buyers were 100% ready to come into play into the second half of the period. And, that's something to watch. Scott, I mean, from your experience with raindrops, what are you thinking here?
Well, that right there, I mean, it got my attention the very moment that you pulled it up, given that other picture on what's going on, because just at a glance, it's telling me exactly what you were putting out there. Versus you might see buyers, bulls willing to buy low, and that volume would be on the lower end of that. You're not going to see that in a candlestick. On here you would. And then as the stock goes higher, it may drift up. It may look pretty on a candlestick, but the fact is there was very little buying up there. It was floating up on air only to get crushed the next day. This clearly shows where the buyers are in control. It's not the all in all, it's one day, but you take that with the combination of what's going on in that bigger picture over the weeks and the months there, and it all just is another part of the confirmation of what you're seeing. So I'm not going to base and say, oh, the market's going to go up Monday because this raindrop shows that, but it's another excellent confirmation of the expectation. It's confirming.
Yeah, and and that's all we can really look at, right? It's, if anybody thinks that they can predict the market, the day ahead, please let me know, because I'd love to know. These raindrops are not something that are going to predict what's going to happen on Monday. They're showing what the buyers and sellers did on Friday, which we can take that with a grain of salt. We can take that as buyers are in control. It's really up to the individual trader or investor. But it is something to keep in mind that we can factually say into the second half of the day, buyers did buy up the top of the range instead of the bottom. That's a fact. I mean, from this raindrop, we know that. Now, this is SPY. I did want to go into the Qs and just kind of look at what the Qs are looking like. So, and we are getting a little close on time here, but before we do kind of move it to questions here, I did want to show you guys a couple examples, right? Same thing on the Qs, right? We've got a perfect test of support during the first half of the day. During the second half of the day, all of our buyers, very similar to SPY, are at the top of the range of the day. We compare this to IWM, and I mean, we really see the same thing. So I mentioned this on Twitter, and I want to show this. So this is October 25th, and you can see that we previously had a very strong area of resistance here from the 21st to the 24th, really not being able to break through this area. Now, what we did on October 25th is we actually broke through this area. Now, sure, we broke through it, right? So this is actually the same candle. So you can see that on the 25th, we've got a bunch of volume above this resistance line. But then you can actually see here, this wick broke through the resistance line. But you cannot get any information about this wick unless you use a raindrop. So you can see here that there's actually buyers above this raindrop. But if you just looked at the hollow candle, all you can see is a wick here. So you actually can't tell if there's conviction by the buyers within this wick of the price range. You only know that the open was a lot lower than what we closed at, which the open was 153.90-ish, and we closed at 155.02. We don't know anything about the price action that made it to 155.52. All we know is that the price made it there and then pulled back intraday. Well, with the candle, we can actually see that volume is aggregating at the top of the range. So to me, this means that probably somebody came in with a bunch of market orders up here and just ripped the price above this line and started to take out the supply above this line. And that's how you can see we had a nice continuation up after that. So similar candle here. We've got the same type of kind of setup. The second half of the day, all of that volume was focused at the top of the range, and none of that volume was near the low of the day. All of it was aggregating at the top of the range. So for me personally, after studying these, which, you know, I could study something for 100 years and easily still be wrong, but after studying these, this tells me that we may have a gap up tomorrow because the buyers were in control into the end of the day. So we'll see what happens. I mean, this is your classic case of previous resistance acting as support, and we may move to the upside. Now, that can happen textbook, that can pull back and then rip, or that can not even happen at all. You know, we're not looking at like the cases that are actually going to happen. We're looking at the cases that are kind of showing up on the chart and getting an idea of where this can go into the future. So, you know, I'm not a big trader of IWM, but Friday's candle does show quite a bit of volume at the top of the range. So, Scott, do you, like, as far as what you trade, are you into small caps at all?
I'm sorry, into what?
Are you into small caps? Are you into, like, what are you generally trading?
I'm trading a lot of the stocks that other people are trading. I'm not necessarily focused on just small caps or big caps. I'm simply going with what I think is more favorable, which I think has better probability. I'm not playing with penny stocks or anything like that. Most of the time, I want them at least above $10. Most of the stocks that I trade are well above $20 and over that area.
Okay. Yeah, makes sense. And, you know, that's generally when they're, you know, and that's the thing, you know, price isn't always a function of how big the company is, right? You can have a $1,000 stock that's only worth $5,000 if they only have 5 shares, right? So the price doesn't always mean much, but like Scott said, you know, the higher price stocks are generally the ones that are going to be a little more liquid most of the time, especially your ETFs, your IWMs, your, you know, anything that's on the FANG side of things, NASDAQ, you know, those are going to be the ones that have more volume, which make these raindrops a little more easy to read. because if you have a stock that's very low on volume, there may be a little discrepancy within that raindrop. So, that's something to keep in mind. And, that's something the broad markets look like into next week. You've got a lot of buying at the top of the range on Friday's candle. You keep this in perspective, though. You've got a very similar candle here that's almost got the same exact characteristic of this candle here. So just because it's got buying at the top of the range does not mean it's bullish. It just is telling you in that particular moment what's going on within this range. So, these are some of the broad market ETFs that are looking interesting. I do want to, before we end, go over some of the roadmap ideas that we have going into the future. And sorry for my voice. I went to Vegas the last 2 days, and Vegas has a humidity level of -5%, it seems like. So that just takes all the moisture out of my throat, and it's kind of been something that's been progressing over the last 2 days. But our roadmap is something that we have as a mapped out thing, right? It's not something that we're guaranteeing to be happening. Anybody who's familiar with the dev side of things, something that may take 1 month may end up taking 3 months. So these things that we have for Q4 are what we have planned out. We hope to have scanners out, which I'm very confident that we will have. Watch list alerts are kind of on that same spectrum as far as the scanning capabilities, and I think those will be kind of a function of each other and probably come out very around the same time. And then if we get to it, we do want to have the ability to capture those wedges, those bull flags, bear flags, in the chart pattern recognition side of things. And then, in general, we want to make the user experience a little more streamlined. We want to have you be able to move your chart around a little more freely. And all of these things will 100% be coming, available down the road. It's all about getting it on the roadmap, prioritizing it. But we promise that at the end of this whole experience, we do hope to have the most unique, powerful, and all-in-one platform out there for trading and technical analysis.
So even I can do it, AJ. I like it. I like it simple.
Yeah, no, hey, simple. And that's the thing, right? Everybody's got their own style of analysis. Some people want one moving average. Some people want 19 lower indicators. Some people just want price action, right? And so these watch lists will give you the ability to create those criteria and then have the system watch them without you having to do anything on the back end. So that's our end goal, is to get this all automated and then actually get to the point where you can integrate this data into your brokerage account and actually make a trade through it. So, we're very much in, I would say, Dan's going to get mad at me for saying this, but I don't even know where we are. Maybe 60% along the way, right? There's so many things we have to add. And, I really want this to be something that tells you guys, hey, this is what we have right now, but this is by no means what we have for the future. This is a very small taste of what we have coming. And we do hope to make this an all-in-one platform for everybody to use, from drawing your first trend line to actually making your trade. So we're very excited, and think that hopefully by the end of the second half of 2020 we'll have all of this integrated. But we don't want to hold a hard date to that. All righty, we are 10 minutes over. I'm sorry to kind of push this a little further, but we had a lot of information to talk about tonight. Scott, thank you so much for joining. And we really are excited that you're finding value in this and using it as your main tool to kind of just take a look at the markets, and not your only tool, but a way to kind of complement what you're already doing with your own kind of discretionary analysis.
Also, thank you, Jake. Thank you for having me here. It's great to be able to share with people. And also, I mean, I've been using this same charting software for nearly 20 years now. This is the first time I've changed. I've seen things, of course, like others have out there. You guys unquestionably have something very unique, very special, new to help a lot of traders, and glad that you're here.
Well, thank you so much, Scott. And, I just want to say this. I've been trading for a long time. I'm by no means a good trader, but I've been doing it for a while. And it's not somebody that I've always kind of looked at as a secondary perspective, a way to look at the charts that I may not thought of. So if you guys want to take a secondary look at the chart, something that you may have not thought of, Scott is definitely someone to follow, and someone to follow on not only livetradepro.com, but also on Twitter. It's just at livetradepro, right? Scott?
Yes.
So Live Trade Pro, at Live Trade Pro is where they can get you on Twitter, correct?
Yes, at Live Trade Pro, exactly. On Twitter.
StockTwits is the same handle, right? At Live Trade Pro?
Exactly, yep.
Well, if you guys want to check Scott's subscription out, you want to check out his charts from TrendSpider, anything that you'd like to do, make sure to check them out. If you would like to check out TrendSpider just as a platform to do some discretionary analysis on, complementing what you're already doing by hand, make sure to check us out. And, that's the beautiful thing about Scott's subscription. You can kind of do this hand in hand, right? He's already using TrendSpider. So if you use TrendSpider and then use Scott's site, you're able to really get all of the information all in one place. And, we want this experience to be something that you don't have to go to 10 different sites. You go to 2 sites and you got all your information. So if you are interested in checking it out, Pro15 is the coupon code that you can use for 15% off. And that is good for up to 12 months of subscription. So 12 months, 12 individual months, or 1 annual subscription, you'll be able to take advantage of that 15% off. So again, Scott, thank you so much for joining us. I sincerely look up to you as a trader. I mean, I've been following your charts for years, and really appreciate and are honored to have you on our webinar tonight.
Thanks, Jake. I really appreciate your good words.
Hey, you're very welcome. And everybody, once again, thank you so much for joining. If you have any questions at all, please feel free to reach out. hello@trendspider.com, or just reach out to any of our TrendSpider social media accounts, and we'll get back to you as soon as we can. So once again, everybody, thank you so much. Have a fantastic night. And once again, Scott, have a great night as well. And thank you so much for joining.
Jake, you also. Thank you.
All righty, everyone. Football is on from now on. So, that could be what you're watching, or it could be a relaxing evening. So everyone have a great night, whatever you're doing, and we'll see you next weekend.